Hi, welcome back. You're watching Trading Hour. Joining in now, we have Sunil Subramaniam, who's the MD and CEO of Sundaram Mutual Fund, to talk about basically where the market looks to be headed. Hi, Sunil. Good to see you in again. First, let's start with the overall market setup. Is there more downside for us, or now with these global recessionary fears going on the back burner, can we breathe easy? What is your house call?
Well, we look at it this way, right? While the news around the recession, like you said, the global numbers looking to be easing, the fact is that India is a sweet spot either way. The reason I say that is that overall commodity prices, including oil, are trending down. And if you recollect, the sell-off by the FIIs, which is about 2.5 lakh crores worth of stocks, largely was a shift out from India as a commodity importer to countries which are commodity exporters. And so that flow back. And from July 1st, we have seen more than 50,000 crores of money come back in from FIIs. So this reallocation will continue. So I see that as a strong support for the market. There will be volatility because there is Fed news flows, there's RBI news flows, there's a lot of news floating around. So to that extent, volatility will be there. But I think that the bottom is protected because of the strength of the returning FII flows, as well as the continued strong SIP book on the domestic side. So there will be good buying support for the market to protect from the volatility. So from that perspective, our house view is that it's now time to focus on the domestic economy. I think the capex cycle recovery driven by PLI, driven by government capex, reviving private sector capex is going to be the key theme for the next 12, 18 months. And I think so if you place your bets on sectors linked to the domestic economy, because margins, which also suffered because of commodity price rising, are bound to ease now with an easing commodity cycle. You will see the next quarter onwards earnings print also looking better and better.
All right. Good morning, Mr. Subramaniam. Thanks for joining us. So, if you are sounding so constructive on the space and you do think that take us through what sectors you think will really do well at a time like this. And if you are to put some fresh money to play, what would you look at?
So if you look at it, the two key drivers, I would say, are the investment cycle resurgence, thanks to those three support pillars that I mentioned, the government, the FDI, as well as the private sector revival. At the same time, consumption has been through a pretty challenging time over the last 2 years because of COVID. And you'll see a bounce back there. And you're seeing the supply side constraints on margins, whether it's for auto, whether it's for FMCG, whether it's for oil-related, any sector where the oil inputs were high, right? Their margins, which are shrinking, are going to expand. So you have demand plus margin widening. So for me, the discretionary consumption space and the investment space, both are picks. Only thing is the investment space would be a slightly longer term pick from a 3 to 5 year perspective. But the key overlay to both these is that bank finance is a key part of the growth story of both the investment side as well as the discretionary consumption side. So I see banks are also in a very sweet spot because they've had the benefit of low interest costs, which means they've locked on to long-term low-cost funds. The rate hikes from RBI are getting passed on only at the margin on deposits, but on the entire loan book, barring, let's say, auto loans or personal loans, which are fixed, all the rest of the loan book is variable. So you're getting the impact of a rate hike on the almost 60-70% of the loan book. So net interest margins of banks with the NPA situation also showing much better. I think provision coverage has improved tremendously in banks. They are well capitalized. So banking and financial services, top quality NBFCs also feature in this lending cycle for us. So I would say that that's our top pick because that overarches over the investment and the discretionary consumption. So if you put 70% of our money would go in an overweight terms into these three sectors: BFSI, investment, building materials, capital goods, as well as discretionary consumption.
But Sunil, would the portfolio positioning still be tilted towards large caps, or are you exploring, more ideas in the mid and small cap space?
See, I think if you look at our portfolios, they've been about 60% large cap. So, which I think is a reasonable tilt, which means you still have 40% oriented towards mid and small cap and oriented towards domestic economy. So as a fund house, we don't need to really make a big shift. We've always been bullish on the Indian economy and hence had a reasonable concentration of mid and small caps in the portfolio. Now, tilt may be a 5% tilt. So maybe a 60-40 could move to 55-45 kind of a belt between large caps and mid and small caps as a pack. So the reason that large caps will continue to be, let's say, 50-55 is for two reasons. One is that the return of the FIIs means that there's going to be support for large caps. So as a safety component of a portfolio, where as FII buying comes up, their Ps go up, so we make good money off it, will remain a core part. The second reason is that most of the benchmarks for funds, right, whether it is BSE 500, NSE 500, are heavily tilted to large caps. So no fund manager can afford to ignore what he's being measured or compared against. And since that contains 70 to 80% large caps, for a fund manager to take a big negative large cap call is also a challenge. So I think 50 to 55% at a minimum in large caps is the way I see portfolios going. And the balance 40-45 is what the domestic story of mid and small caps will come to add alpha.
All right, Mr. Subramaniam, we will leave it at that today. Thank you very much for joining us. So sounding extremely optimistic on the market right now, and also, saying that the downside will perhaps be protected. He's betting on industrials, financials, as well as the manufacturing space to drive growth. With that, we're going to get into a short break now. But when we return, we're going to speak with the management of Visakha Industries to discuss demand trends as well as the outlook for FY23.